You may have heard, it's very common around this time of year, if you take out RRSPs, you will save yourself money on taxes. Save yourself money on taxes. What does this mean? Does it allow you to have free money from the government? Does it allow you to have a refund? In this presentation, I'm going to dissect how RRSP deductions work, what exactly is happening when you contribute to an RRSP, and what's going to happen to your money. It's a question that many people have asked, and if you're listening to this presentation, I hope that it is able to clarify some of the questions that you may be asking, right? So I'm going to dissect it. We're going to look at how the contributions work with your registered retirement savings plans. But first, please do me a favor. Please hit the like, subscribe, support the channel, show some love. If you haven't met me before, my name is Leon Mann. I'm a licensed wealth consultant with Money Assist Financial. And what I do, I help hard-working folk add an additional multiple 6 to 7 figures to your retirement portfolio. I'm able to do this by providing a free, no obligation financial needs analysis. The financial needs analysis is there to map out where you would like to go. It allows you to see where you currently are, and much like a GPS, it is able to map your ideal lifestyle, how you would like to end up, say down the road, 20, 30 years down the road. An RRSP deduction is not free money, right? Come tax time, what happens is that you're able to get back refunds when you contribute to an RRSP. Now, how this works is that it lowers your taxable income. It does not directly lower your tax bill, but it lowers your taxable income. And how it works is that if you are in a high income bracket, let's say you make $80,000 a year and you made a $10,000 contribution, it's going to deduct your income to $70,000. And what the government sees, the government will tax your income as if it was $70,000. So you're going to be taxed as the lower income when you contribute, let's say $10,000. You will get back a refund in the $80,000 a year tax bracket. $10,000 will be taxed at 30%. You will get back a $3,000 refund. Come tax time, it's tax deferred, meaning that if you earned income or growth, if you have dividends, or if you have capital gains inside your registered retirement savings plans, you do not pay taxes on the increase in your investments. But tax deferred means that when you take it out at a later date, then you will be taxed at the income that you are then, right? So this is why a lot of people, they would rather take the money out during retirement, because it's going to be added on to the income at retirement, which is minimal, right? Because you're not going to be making a full-time income during retirement. So it is best to contribute when you are in a higher income bracket, and it is best to withdraw from an RRSP when you are in a lower income bracket. And another thing, some people may get confused, is that you do not have to use up all of your contribution room, right? Because if you do not use up your contribution room, any unused amounts is carried forward. So meaning that your room does not necessarily go if you don't contribute, right? It's always carried forward to the following years in the future. So if you get a higher paying job in the future, for example, then you can take advantage of all your contribution room that you carry forward from the previous years. It works best if you are in a high income bracket, and then you can take advantage of the tax sheltering benefits that an RRSP would provide. Now, if you don't know how much contribution room that you have, it is the best thing to go to the CRA website. And on the CRA website or the My CRA website, you'll be able to see exactly how much contribution room that you have remaining in your RRSP. And another thing, we're talking when you get back your refund, that money is basically yours to do whatever you want. Some people use the tax refunds to take a vacation. Other people use the tax refund to pay down debt, while other people, they would reinvest the RRSP tax refunds to compound and build more in the future. From a financial planning perspective, it is always a good idea to pay off debts and to possibly reinvest so that in the future, moving onwards, you have more investments to compound and work for you. So with an RRSP, what happens is that it lowers your taxable income. It defers taxes until you take it out later. And the third thing is that it works best when you are in a higher tax bracket because you're going to get more back in the form of a tax refund. So it is not magic. It's basically strategy, right? By understanding how it works, then you can take advantage of this most powerful tool that is available to us here in Canada. By the way, speaking of registered retirement savings plans, do not forget the last day to contribute to an RRSP for 2025 is on March 2nd of 2026. If you have any questions with regards to RRSPs, feel free to drop a comment below or check out my website, LEONMANN.CA. I will provide you all the insights, and feel free to subscribe, like, and share the love. Show some love to the channel so that every time you hear the bell notifications, you'll be directed to a new financial literacy video. I thank you guys for tuning in. Until next time, peace and love. Take care.